We provide a comprehensive suite of insurance solutions ranging from the basics, covering property and basic liabilities, to obviously much more complex, financial lines and professional lines type insurance as well.
Welcome to our podcast From the Ground Up, where we interview startup founders exploring their journeys, their success, challenges, and lessons learned. We hope you'll be inspired in discovering what it takes to build a thriving startup. I'm your host, Jake Aaron Villarreal, and excited to have with us today Sam Hodges. Sam is a co-founder and CEO of Vouch, an insurance provider serving the needs of tech startups and high-growth companies. Sam was formerly co-founder and CEO of Funding Circle, where it's leading marketplace for business loans. Before co-founding Funding Circle, Sam spent more than 15 years as an entrepreneur, investor, and advisor. So Sam, you'll fill us in a lot more about your product and your platform. Before we do that, I want to share a little bit more about you with the audience so they know kind of who you are, where you've come from. And so to start out with, maybe just give us a little background of where you grew up and what part of the country did you come from?
Absolutely. So I grew up on the West Coast of the United States. I was born in Santa Cruz, California, and then grew up in Eugene, Oregon, and then Santa Barbara, California. And the commonality between those three places is they're all university towns. My dad did a mid-career PhD, and so the family kind of followed him around as he finished out his PhD in physics, and then ultimately became a research scientist down at an R&D group in the Central Coast. And so, for me, I identify fully as a West Coaster, despite actually living on the East Coast for about a decade, and grew up with a high degree of exposure to, science, math, and technology. And so, from pretty early day, had a lot of interest in those areas. And certainly that's kind of a through line to a lot of what I've done professionally over the last 20 years or so.
That's great. Yeah. You've got a lot of great leadership experience and organizations you've helped take from really the beginning to going public. What was your first entrepreneurial experience?
Sure. So I've known since probably high school or early college that I really wanted to start a company. And what was funny is I think when I kind of had that view, I didn't really know what it meant. And I was really lucky in my early professional experience to get some great exposure to entrepreneurs and kind of learn at their need, so to speak. So the first startup I joined, which actually is not on my resume at all because it was a short stint, was an early MVNO in New York. I was at the time called Digicel USA or Blue Mobile, working for an entrepreneur named Amol Sarva. And what was funny is about 6 weeks after I joined the company, it was actually sold to one of its investors. And so it was a very short exposure stint, but a really good one. And, kind of certainly validated that it was what I wanted to do professionally. And on some level, kind of the rest is history. Most of my experiences since then were either in investing in, starting, or helping build other early and growth stage companies.
That's great. College always has a play in how you sort of navigate your life. And you went to some really good schools. You went to Brown and then you went to Stanford. When you were at Stanford and you left, and now you've been in business for a number of years, when you look back at it, what was the most valuable lessons you learned from Stanford that you've now been able to apply, if at all, in your current career?
Sure. Well, so I think a lot of folks in the tech space rightly are skeptical of MBAs. And I say that there's good reason, right? I think a lot of folks coming out of MBA programs, maybe higher confidence than competence. And I think that creates a lot of problems, particularly folks who are kind of early careers. That being said, for me, my time at Stanford was really a valuable one. And it was valuable in three ways. One, it was just tremendous exposure to the Valley. I met a lot of VCs and entrepreneurs and, operators and kind of just got a lot of exposure. Two, the curriculum at the GSB, certainly when I was there, and I believe it's still true today, there was a heavy emphasis placed on kind of introspection and really thinking about kind of your place as a leader, thinking about how you show up with other people. There's a famous course that, its nickname is Touchy-Feely, which gives you a sense of kind of what it's all about. And I think the reality is, as someone who, wants to build and lead teams and ultimately build and lead organizations, that view that you really need to kind of understand yourself and understand how you're showing up in the place before you're really equipped to be a good leader of other people, I certainly hold to be true. And then the third thing that I got out of Stanford, honestly, was just an amazing friend group and network of folks who were kind of similarly staged in their careers, many of whom have gone off to do really amazing things in a lot of different spaces. And so it's not just the learning that I got then, it's actually the learning that I've gotten over the last, decade or, plus, but it's actually quite a bit more than a decade now, that when I'm, catching up with folks and hearing what they're working on and, being able to trade notes and share experiences. And I do think that those relationships and reference points are really useful, particularly since company building can be a lonely job.
Yeah, I got it. You got into FinTech and InsurTech, and a lot of that is, complex on the back end. There's so many different moving parts. Funding Circle to me is a really interesting story. And so for you, getting into that company, starting the company, creating an opportunity, and then taking it public, what was the inspiration for you in getting into that space?
Absolutely. So there are really two things that informed my enthusiasm to build a company in the small business lending space. The first was my and my co-founder in the U.S. Experience as investors in small businesses. And very specifically, my business partner then and now, a guy named Alex Finelli, he had started a set of gym franchises that I was an investor in. And we had a really hard time getting loans for those businesses, despite the fact that they were, cash flow characteristics were good, they were growing, they had collateral, and banks really weren't willing to give us the time of day. Think back to, the years immediately post the financial crisis, the banking system was still pretty frozen. And so we definitely just saw a real gap in the market. And the second thing that informed the business model that we took in building out, ultimately we became, Funding Circle, was a marketplace-driven approach. And that was informed by my immediate prior experience running business development for a company called Second Market, where during the financial crisis and kind of immediately after, we had built an electronic marketplace for illiquid financial assets. And what I saw was there was tremendous appetite for alternatives. There's tremendous appetite for products that could provide, interesting return and yield characteristics. And in starting, what became Funding Circle US, really was the marriage of those two, things. The need for small business credit on the one hand, this marketplace-driven business model, where bringing in non-traditional, i.e. non-bank investors and lenders, we thought could be a really interesting way of kind of getting liquidity into the system. So that was the seed of the idea.
God, that's great. A lot of compliance, a lot of areas you have to make sure you have in place when you build a fintech company. And the transition from that to insurance, in some ways it seems like it's very similar. And in other ways, obviously it's a different vertical. What attracted you to insurance? Because for insurance, a lot of us, it's pretty nebulous. You kind of know it's something that happens. You kind of need to have it. You're not sure how it works. Ultimately, you hope you don't need to use it. But, it's policies that we have to be covered by. And so for you, kind of walk us through that a little bit. And before we do that, I just want to share with you, because I was trying to understand insurance too before we had this podcast. And I went to ChatGPT and I just put it in and wanted to see what it told me. And then I said, you know what? I want you to rewrite this for a 5-year-old. And this is what it told me. It said, let's pull it up here. It's actually pretty interesting. Business insurance is like a special shield that helps protect businesses. It helps them be safe. And sometimes when you go through the wrong and the right choices, it can cost you money. For example, if something breaks or gets lost, the insurance helps to fix or replace it. When a business gets insurance, they pay some money called a premium. If something bad happens, that insurance company pays for the damage, and the business might have to pay a little bit too. So that was its definition and how it explained it. What's your definition? How do you explain it?
Sure. Well, so business insurance, any type of insurance, is a promise to protect. And so I actually really like that the ChatGPT description. I tend to agree with what it laid out. In our context, the way I think about this is when you're building a company, all sorts of things can go wrong. And some of those things are inside of your control and others, frankly, aren't. Accidents happen, things happen. And that could be a theft, it could be a fire, it could be a lawsuit from a disgruntled employee or a dissonant investor. There are all sorts of things where if you've been around company building long enough, you've probably experienced, half a dozen of these things. And the reality is, if you let these kind of risk events, get on too much, or if you don't have insurance in place to protect you against them, they can end up chewing up a tremendous amount of time and frankly, a lot of money. And so in our context, where we're insuring and helping get insurance for other high growth entrepreneurial companies, what we're really trying to do is make sure that companies don't fail for the wrong reasons, right? the reality is many startups will fail. But our hope would be that startups, if they fail because they don't find product market fit. They don't fail because they get caught up in a really nasty lawsuit that ends up bleeding them dry over a period of time. And so we provide a comprehensive suite of insurance solutions ranging from the basics, covering property and basic liabilities, to obviously much more complex, financial lines and professional lines type insurance as well.
Got it. That's great. Yeah. It's something that we've always had it. And at different life cycles and companies, you might need more, you might need less. For you, if you look at it, what does your platform do differently than, say, just going out and buying insurance in the marketplace today?
So when we started Vouch about 5 years ago, there were two core parts of our thesis. The first was a view that high growth, innovative companies really were poorly served by incumbents. And I think, if you look out across the insurance landscape, there's been plenty of innovation on the personal line space. On the commercial line side, i.e. Insurance for businesses, it's been far more stagnant. So the coverages that are in place, the experiences that you have, how long it takes to get insurance and so forth, those things really are pretty badly broken, were and still are. And the second perspective was we thought we could actually use advanced analytics and technology to not only make that experience better, but to actually also better understand the exposures, the actual risks these businesses have in a more comprehensive way, and to ultimately build new insurance products that are better matched to them. And so we started Vouch as what's called an MGA, Managing General Agent. We have built a set of proprietary insurance products. We also sell products from other carriers to comprehensively meet the needs of all our clients. But for our proprietary products, we've really tried to do is design those in a way where they match to some of the specific risks that our clients have that perhaps more traditional offline businesses don't.
Yeah, that's great. Artificial intelligence has come out and it's hit every industry in a different way. Is AI part of your platform today? And with customers that are building AI, so AI startups, what are some of the risks that they need to be aware of that a potential product like yours can help support them in?
Absolutely. So I'll start by saying we already serve, I think, more AI companies and startups than any other insurance provider in the world. I'm not 100% that's true, but I'm pretty sure. We serve hundreds of companies in the space already simply because of our vertical focus on the innovation space. And if you look at what's happened in the venture-backed ecosystem, particularly over the last year, there's just been an absolute Cambrian explosion of companies that are, building around generative AI in various ways. So we are very excited about the opportunity, and we're honored to have the opportunity to serve a lot of the great companies out there that are building in the space. In terms of the impact of AI, we look at it on two levels. One is obviously the impact on our clients, and whether you are building AI technology or whether you're using AI in how you build your company. And our view is most companies will do one, if not both of those two things pretty quickly here. The reality is it does introduce some novel risks and exposures that other companies may not have. Specifically related to generative AI, things like advertising injury, model performance become real issues. And so we actually formally launched AI as a vertical for Vouch about a month ago. We have a bunch of content, which I'd love for folks to check out. You can check it out on the Vouch website. We also have a number of folks on the team who are specifically working with AI companies to make sure, again, they really understand those risks and have the right protections in place to address them. The other implication of AI is in how you build an insurance company in its own right. And this is another area where we're quite excited. If you think about what an insurance product is at the end of the day, an insurance product is a set of text. It's a legal contract. And it turns out that large language models are pretty good at interpreting and also generating some of that information in a way where you can actually do some really interesting things. For example, we're running pilots around helping clients understand their existing coverage if they have insurance with an incumbent, and helping them decipher how does that coverage map to some of the unique risks in their business. A second example, taxonomizing or classing companies. It's a notoriously hard problem in insurance. You really need to understand what a client is doing in a very granular way. And one way you can tap into that is by looking at all the text that they have around their business, what they put on the website, what other people say about them. And again, that's an area where large language models, we think, have a really valuable role to play in kind of serving as an interpretive layer and then ultimately generating information that's useful for both us and clients in terms of how we serve those. So those are just two examples. There are many others, but we're really excited about how AI and specifically generative AI is going to impact insurance. Obviously, machine learning, how you use kind of nonlinear analytical techniques on large structured data sets. That's been part of the insurance equation for a long time. We do that as well. But generative AI definitely introduces some new opportunities that we're pumped about.
Yeah, really exciting. There's so much going on there. It's trying to carve out what niche you can provide some value at and how do you integrate AI to help support not just your platform, but also what's the user experience going to be like because you're utilizing AI, and hopefully it helps them make better decisions, make it faster, and ultimately have a better experience overall. When you first launched your current company here and you started getting into the market, building a marketplace is pretty tough. How did you get your first cohort of clients? And what, from your view, looking back now, was a marketing experiment that you did that you were pleasantly surprised by the results?
So love this question. So I am a big believer in strong ground game if you're doing a B2B product or service. And for us, we selected Utah as our launch market. As you probably know, insurance is regulated primarily by the states. And so if you're building a new insurance product or company, you need to take a state-by-state approach in how you're rolling it out. And so we did a bunch of thinking around what would be the best place to launch. And ultimately, we selected Utah really for two reasons. One, from an insurance regulatory perspective, it's a very straightforward place. You can understand what the rules are and make sure you meet those requirements in a pretty, standard way. There are other states that are important, but frankly harder to get into. And so that was attractive. But the other reason we chose Utah is there's an absolutely amazing entrepreneurial ecosystem there. What's sprung up kind of in the Salt Lake City area over and all the way south over the last, 10 years or so is incredibly impressive. Lots of really cool companies being built there. And we fortunately had some good connections into that community. And so for our first couple of months, immediately prior to launch and then immediately after launch, both my co-founder and I, but frankly, particularly my co-founder, spent a huge amount of time on the ground talking to companies, getting them to sign up, in some cases, literally working with them to make sure that they were putting in their application in the right way. And honestly, it was those efforts that got us our first 100 clients or so.
Wow, that's great. Utah's a great place to ski too. So hopefully you got some of that in there, or some snowboarding in the process.
Absolutely. Yep.
Great. So your company looks like it started 5 years ago and has kind of gone like this, up and up and up. Typically companies that we see and we work with a lot of startups, at some point they got to make a left or right decision, a pivot, a rethink of where they're going and how they're going to get there. Doesn't sound like you've had to do too much of that, but let's talk about how you've evolved. What are some of the things or some of the milestones that you've hit and you've broken through to take next steps within your company?
Absolutely. So, as with any company, we certainly have made missteps and things we've had to evolve. You're right. I think our fundamental strategy has borne out largely the way we hoped, which, we count ourselves lucky for. The way I think about what we do today, it's number one, we're focused on serving the innovation economy writ large, both early stage as well as scale up companies. And number two, building products that are actually really relevant for those types of companies at risk. Things that have changed in terms of how we run the company. There have been lots of internal changes, and particularly, how we ran the business prior to COVID versus during kind of the, intense period of COVID to now kind of largely in a post-COVID world. That has been a lot of change. One other thing we've done is we started with an initial focus on early stage startups. We then realized pretty quickly we needed to serve growth stage companies as well, for at least one very simple reason, which is we're seeing tons of our clients go from being little baby companies to much more mature growth companies very quickly. And so if we weren't actually able to keep pace with their needs, both in terms of products, but also our service offering, we'd churn those out. And, early on, we did lose some of those accounts. Over the last couple of years, as again, we've kind of expanded our aperture and service offering, we've got a much higher degree of success on retaining those companies as they scale. The other vector change, just really quickly, is we started with an initial focus on just tech. So software, internet, consumer, hardware that doesn't go in your body. And then what we've done gradually over the last couple of years is broaden that to serve emerging categories, categories like Web3, like AI, but also to get into the health and life sciences space, which we're really excited about. There's just a tremendous amount of activity in that category. We're super pumped. We're seeing a lot of stuff in digital health and longevity, in kind of novel therapeutics. We want to, as we've done for tech startups, we want to be the go-to place for an early stage life science or biotech startup to go as well. We're still reasonably early days with that, but are definitely investing more in that category.
That's great. So if you continued to scale up, walk us through over the last 5 years, started at your founders and then from there grew. How big is the company today employee-wise?
We're about 215 people today.
That's great. And looking back now, was there any one role you wished you would have hired sooner that would have helped you in a way that would have progressed the company?
It's a really good question. I mean, short answer, I don't want to sound arrogant here. I don't think so. I think we actually largely gotten the right hires at the right time. We certainly have made hiring mistakes, right? I think that's, always true. I try not to make too many hiring mistakes, right? And hiring quality is something I think we really pride ourselves on. We certainly have gone through different iterations on how we are organized. We went from, again, being kind of single category, single segment, early stage tech to now multi-category, multi-segment. And so we've evolved both how we organize our go-to-market efforts, but also how we organize our underwriting and insurance product innovation teams as a result of that. We also have evolved, frankly, a lot around how our product engineering and design teams work. And part of that just comes with, we obviously early on took kind of a somewhat hacker-like mentality in terms of how we built out our tech stack. The reality is we're building really complex enterprise systems, right? We have our own proprietary policy administration system. We have an API, bidirectional API that allows us to deliver embedded experiences. We're building a lot in terms of using generative AI and kind of working on foundational models to do some really interesting stuff in the LLM space. Those things require real technical investment and an engineering and product work that's designed appropriately to actually do that complex work. So that's an area where definitely we've changed our org structure a lot. But in terms of specific roles that I think we should have hired earlier or differently, I think we've mostly gotten that right.
That's great. Well, as you scale any company, you always have to make a lot of choices in the people you bring on and scale at the right times. This is a challenging market today. It's different than it was 5 years, 6 months ago, 12 months ago, a year ago. For you, walk us through, if you're a company looking to scale, some of the maybe insights that you can share, or some of the lessons you've learned that in this type of market can be beneficial for them to know about.
Sure. Well, so look, talent markets change and evolve in terms of their competitiveness and in terms of what's actually available. I think there are two really meaningful shifts that have happened just over the last year. One is there's obviously the continued trend of globalization of access to talent. If anything, we continue to see that continuing to play out in a really exciting way. The other is obviously the software engineering market and general talent markets for startup as well as public companies has changed a lot just because there's a lot more pressure on the ecosystem. And what that means is there's frankly more talent available now than any point that I can remember in the last 5 or 6 years, which, obviously you don't want to see these pressures in the market, and you obviously want to see people, gainfully employed. On the other hand, as a, company looking to hire, I actually think it's a pretty good time to build a great team. I do think this is a moment where being really clear on your purpose and finding people who are willing to work hard and do hard things in a pressurized environment is really important. I think there were lots of people who got attracted into venture-backed companies for the wrong reasons, when money was really easy and when scaling a company was as easy as clicking your fingers. And today it's a lot harder. The burden of proof on companies to get to their next rounds are much higher than they were certainly in the second half of 2020 or 2021. Ultimately, I think that's probably a healthy thing for the space. At the same time, it does make the type of team you build, the culture you build, the expectations around performance. Those things have shifted quite a bit.
Yeah, that's great. Well, you've gotten the hiring aspect right. Is there one question that you'd like to ask when new hires are coming on board that kind of gives you a sense of this feels like the right type of person for the company or our culture, or this is definitely not the right fit for kind of what we're looking for?
Sure. Well, I really go down to skills and mindset, right? Which is, that's not my framework. Lots of folks use it, but I really do think if you can distill most hiring down to an evaluation of those things. One thing that I look to do, certainly for people who are going to be in leadership roles of any sort, so kind of managers plus, The metaphor I would use is you need to make it a bit of an obstacle course, which is a concept I talked about actually a lot with my executive coach in my prior company. And what I mean by an obstacle course is being a leader means you have to be good at many different things, and being effective is contextual. And the problem with a traditional interview process is you sit people down, you get a sense of their experience, you kind of talk to them a little bit, and then most people kind of do a sniff test and decide whether they want to hire someone or not. And the reality is the error rate on that is incredibly high. And so my view is, particularly for folks who are really important roles, more senior roles, whether they're ICs or leaders, you really want to be able to get a complete picture of someone. So doing some behavioral interviews, doing some resume review interviews, doing some case work, ideally, for folks who are in more collaborative roles, get them into a conference room and actually do a whiteboarding session with them, and then references. And so we try to, when we're hiring for more senior, more kind of important roles in the company, we try to be pretty comprehensive in our approach. So we really understand someone's skills, motivations, mindset, how they're going to show up in different contexts before we ultimately, move forward and make that offer.
Yeah, really cool. Culture is a big part of every company. There's a certain aspect of it that that comes from you as the leader of the company, right? The tone set, the leadership describes what they want, the philosophy, and ultimately it kind of trickles down. What kind of culture do you have, and what have you nurtured at Vouch?
Well, I'd like to think that we have a very values-driven culture. I mean, that's certainly what we aspire to. When people talk about business cultures, they oftentimes describe kind of social cultures. And I think social culture is an important part of company culture, but it's not the most important part. When I think about what makes a company culture, it's ultimately what are the behaviors that are selected for and rewarded, and how do you go about making decisions? And I think a lot of both business performance, but also is a company or an organization a good place to work, really stem from those practices. You mentioned it starts with the leaders, the founders. I absolutely agree with that. At the end of the day, a culture is going to be most reflective of how the founders and executives show up and behave, not only with each other, but also with folks on their team. If you have a highly politicized leadership team that, uses interpersonal relationships as opposed to data and analytics to get decisions done, well, guess what? That's going to translate down through the organization. For Vouch, one of our most important values is listen, challenge, and grow. We try to take a very kind of logical and, call it a comprehensive approach to making decisions where it makes sense to do that. By the way, many decisions, the right decision is the one you can make quickly. But for the decisions that really matter, those kind of one-way door decisions, to use the Amazon word, being really thoughtful about how you do that and, doing the necessary work and being objective in it and challenging yourself to be really, make sure that decision is really high quality, I personally think is important. So just to give you a flavor of how we think about kind of culture building.
Yeah, there's a lot of people that are going to listen to this and they might want to join your company. So just giving that kind of overview is really good. Is there anybody, I'm going to put you on the spot a little bit here, is there anybody aside from your founding team that you feel gives you the best picture of what your culture really is on a day-to-day perspective, from your opinion?
Yeah, it's a great question. So hopefully this doesn't come up wrong way, but one thing I think about a lot is, and I'm going to use a loaded word, but basically as a leader, how can you get spies in the organization who are actually going to tell you what the heck is going on?
Right.
Because particularly when you're talking about an organization, more than 50 people, certainly more than 100 people, what you are hearing as the CEO or as an executive is going to be a subset of the truth. And oftentimes it'll be shaded. And it'll be shaded sometimes in a manipulative way, but sometimes just frankly through a game of telephone, right? Because it takes time for information to work its way through an organization. And so I do skip levels regularly. I have people on all across the company and every team who I feel like I've got a good, honest relationship with, where if I go to them and say, what's actually going on? What's working? What's screwed up? If you were me, what would you be paying attention to? And where, again, I won't always get the right answer, but I'll get a lot more than if I just relied on the kind of the natural information flow. So I do think figuring out how you can kind of get a comprehensive view on what's going on in your organization is a very important thing to do as a leader. And obviously in a pre-COVID, everyone's in the office. moment, it was a hell of a lot easier, candidly, right? Because you could just, the whole management by walking around, you could just go walk into the sales area and hear what the salespeople are saying. Doing that via Zoom and Slack is harder, but I just think you still can do it quite a bit.
Yeah. God, it's really insightful. I've never really thought about it, but it is true. We don't have a 200 people company like yourself or 215, but so many times I don't hear the backstories that are going on until I go one-on-one, and then, I didn't even know that was happening. Why didn't you tell me? We could have helped you. I could have supported you here, and we could have fast-tracked this or made a different decision. So it's hard to always get that information, but when you can get it, you got to figure out how to get it and keep that.
A leader who I really respect, who's about 10 years further along in her career than me, she made a really interesting observation, which is there's a difference between being a micromanager versus being microinterested. And I think being microinterested, really understanding the ground truth in as many areas of your company as possibly you can, is really valuable. You don't want that to translate into being a micromanager, though, because then you're going to disempower your people and you're going to really slow things down. So I think I tell people I work with, look, keep me in the loop. I want to know what is going on. But that doesn't mean you necessarily need my sign off to do stuff. I just want you running. I just want to be aware so that if I see something that's out of sync or if I see a problem starting to emerge, I can help get on that as soon as we possibly can.
Yeah, really cool. Your company looks at companies and helps them avoid risks. And you've talked a little bit about that, but I want to go back to that a little bit. What are the common risks that founders face in the startup world today as they're building that maybe you can see from a different lens when it comes from an insurance platform perspective, or just in general? Maybe you can share some insights about some of that.
Sure. Well, look, I think the tricky thing about risk management in the context of a startup or high growth company is startups and high growth companies are inherently risky. And so if you spend all of your time worrying about risk management, you're never going to actually do the thing that's most important in building a company, which is figuring out what your customers need and building things that you can offer to them in a way where you ultimately can make money as a company. And if you can't do that, and if you can't build a good team and organization to support that business effort, you're not going to be successful. So what I'd like to think is when Vouch partners with one of our clients, we can actually help shoulder some of the load thinking about some of those risks. When I think about risks that are very common, they come down to the property of businesses, the products of business, the people of businesses, and also the partners of businesses. And when you think about the types of risks that are specific to those, it really comes down to, are you protecting your intellectual property or your physical products in your inventory? With your people, are you in a situation where you're doing things that are breaking the law? It happens more often than we'd like to see, honestly. Making sure you're compliant and doing things in a way that's legal, particularly in regard to state laws, is you got to get those details right. And even if you do, you're sometimes going to have situations where, for whatever reason, an employee becomes disaffected, and for better or for worse, in the U.S., you can get sued by anyone over anything at any time. And so we do see kind of employee-related risks as a common common thing. For partners, honestly, most common thing that we see there is commercial disputes. Not all of those are insurable, but certainly thinking about what are the risks inherent in a partnership, that is certainly important. And then with respect to products, product liability and product functionality, right, in the context of a service, it'd be more of an E&O type risk. That's an important piece as well. So there's a lot of stuff in there. Ideally, you want to be pretty comprehensive, and you want to be pretty tailored to the specific type of company and product you're building.
Yeah, that's great. Well, you've covered a lot about insurances, and I love where you're going with your company and the growth of it. You had the luck, and not maybe the luck, but actually the success of taking a company public. It's the goal for a lot of entrepreneurs to really take a company from the beginning all the way through to being a public company. When you do that as a leader, it must give you some confidence. But how do you feel once you go public? What is it psychologically? What's it do to you?
Well, so first off, to be clear, when I was in Funding Circle, I had transitioned my operating role before we took the business public. So I was not heavily involved in the IPO or the immediate aftermath. I went to the IPO party, which was amazing, stock exchange, all that good stuff. I was still involved on the U.S. board and as an advisor at that point in time. And my experience of it, with that context was it was just this incredible milestone event. And, I think a lot of people view an IPO as an exit, and for some shareholders it is. The reality is an IPO in most cases is a financing. And so reminding people that an IPO is not the end state, rather it's an interim milestone that you do as a way to bring a company to a further level of maturity. I think that's an important piece. I think we largely got that right at Funding Circle. Certainly there was a bit of a tonal shift with the team, and some folks kind of viewed that as like, okay, well now I've done my stint and I'm ready to go onwards. The reality is, if you look at the way most tech companies have performed over a multi-decadal period, more value creation happens after companies go public rather than before they go public. And so again, I view an IPO as it is one way to create liquidity and get capital for a company. It's certainly not the only way. For some companies, going public makes sense. A lot of other companies, I think, really benefit from being private, just because you can kind of relieve some of the pressures that come with being a public issuer.
Yeah, makes sense. Is there anything I haven't asked you that you want to share?
I think so. No, we covered a lot of ground, both for me, the business, and kind of what we're seeing in the insurance landscape. I guess my closing comment would be just view this as obviously a pressurized moment in the venture-backed ecosystem, a moment of, frankly, a great opportunity and discontinuity. And so I think it's a pretty interesting time to be building something and be thinking about how you build something, given all the changes in the market.
Great. Well, as we end here, I'd like to first give a shout out to you, Sam, for joining and sharing your story, not just about you, but your company and where it's going. And also to our listeners, thank you for your time, spending it with us. Hopefully you'll be inspired and entertained at some level. And, we'll follow back up with you in the future, Sam, to see where things have progressed. And if companies or people want to hear or find you, where can they sign up for your insurance? Where should they go if they want to just explore more?
So we're easy to find. We're just vouch.us, and there's a apply now bit. And then I'm easy to find as well. I'm just sam.hodges at vouch.us. And so if I can be helpful in any way to anyone in the audience, obviously feel free to reach out.
Great. Perfect. Right. Thanks. And we'll see you on the next episode. Before we wrap up, I want to give a big shout out to all the entrepreneurs that have joined to make this podcast possible. And for all the listeners for listening. It means the world to me that you chose to spend your time with us today. I'm your host, Jake Aaron Villarreal, signing off for now, but can't wait to connect with you all soon on the next episode. Take care. This show is sponsored by Match Relevant, a company that helps venture-backed startups find the best people in the market, and they do it in 3 simple steps. First, they sit down with founders to understand their story. Second, they tell their story into multiple candidate channels. And third, they schedule interviews within 48 hours. Find us at matchrelevant.com to learn more about how we do it.